Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Last day of the month, August the 31st, 2015. Anyway, markets coming off in the morning after an earlier, stronger start. Things are reversing quite quickly. The A50 over here that we see is actually down 2.25% after sort of hovering around a flat line, and this is having a drag on the comparables in North Asia, with currently maybe the Singapore market or the MSCI or Singapore Free Index just up barely a touch. Tokyo and the Australian markets led off the day with a significant reversal to last couple of days of bounce that we've seen in the markets. Now, a key reason for this was over the weekend we had the Fed's annual Jackson Hole meeting, where there was a congregation of European and US Fed officials and also those of India. And the rhetoric that had come out from there suggests that a rate hike in September led by the Fed is clearly still very much on the cards. Because the parameters that the federal governors or Fed governors have used, i.e. mainly inflationary numbers also, clearly suggest there is still pressure for them to actually move here. Clearly that sets the tone for early trade this week, and perhaps it's a little bit of a contradiction to what we saw earlier in the week, last week, when a Fed official, the governor, I believe he's the New York governor, Fed governor William Dudley, suggested that that with regards to the volatility that we have seen in the markets in recent times, perhaps the foot may be off the pedal down there. So clearly, Fed speak, as they normally are, totally confusing, totally unbiased, totally on the fence, has once more determined early direction for this morning's trade. Now, off the bat, we are seeing things like the Japanese index actually coming off quite significantly down here, down about 223 points on the cash index, and that can be in part aided by this number that came out suggesting quite a poor read on industrial production, minus 0.6 versus a forecast of 0.1, and actually a tick up or an uptick of 0.8%. So as we are speaking, as we sort of focus on some of the rhetoric from Fed officials or central bank governors or central bank officials, we are also seeing economic numbers as we go along not being too outstanding. Tomorrow, start of the month, we will see the fresh introduction of the monthly PMIs, followed by at the end of the week, the big number which I think everybody is going to be focused on, which is the US payroll numbers at the end of the week. Now let's just pull up the volatility index, or the VIX, which I have spoken about briefly too. This, once again, to recap, is a fear index, which I think has started to gain quite a bit of attention and action. If I were to just draw some basic simple trend lines down here, we are looking at perhaps things narrowing down once more to a point of inflection. I mean, a term which I used to use and like to use quite heavily. So essentially, any breakdown from this point could set things off, in a clearer direction once more again. Again, I want to point out this big move up was because of the stock market's plunge that we saw the last 2 weeks or so, but the consolidation here is actually at a quite high level, which clearly suggests that more and more people are actually buying insurance, if you may, for a potential sell down once more for the market. Oil is something that I like to pull up purely because oil had this big punch through after it broke the $40 level or so. We saw this continuation very sharply, essentially a short squeeze down here. Now this pullback down here, if it lasts for the next couple of days and held at this level, may set things off to maybe test this level of 46.5. Conversely, if oil punches through and breaks below the 43 level, then we will see this thing break down once more. But essentially, this is one of the more aggressive or more volatile commodities that we've had on trade on Friday. Finally, I just want to talk very briefly about the dollar Sing. The dollar Sing, for some reason, is still maintaining at a high level today's strength in the dollar Sing, or weakness represented on the Singapore side of things, could have been set off by what's happened over the weekend, or what has happened over the weekend in regard to the protest or huge street protest that we have seen in Malaysia, calling for a no confidence vote on the current incumbent Prime Minister Najib. Now, the Singapore or the dollar Sing has been a so-called proxy play. First of all, this move here was motivated by the yuan's devaluation, but it's still maintained at a high level purely because over this period of time, we've seen bombing in Thailand or terrorist attacks in Thailand, causing for a sell down of the baht. And then we've seen this political protest coming from Malaysia once more. So Singapore is once more lumped in together with its regional, and all the regional currencies are weak, calling for perhaps a weaker Singapore dollar represented by this dollar Sing down here, which could see this level down here being punched through, this 141 level, which is a 25 or 23.6% extension of the Fibonacci breakout level extension. And if this happens, we may see this thing being the next resistance. Conversely also, the 139 breakout level, as demonstrated here on this line, remains that strong support. So clearly, early on in the week, but still quite a few movers already as we speak, and it's going to be quite an exciting and a wild week again, with so many data points for one to actually trade off. Anyway, thank you very much and have a good week ahead.